What's going on, traders? Hope everybody had a great New Year's. Welcome to 2026. Wanted to kick off the new year here with a video going over the E-mini S&P futures as well as the NASDAQ 100 NQ. Thank you so much for joining me. Reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. My name is Shark, and again, thank you so much for joining me. We're going to take a look at some longer time frame charts, some day trading levels, and we're going to look at some other data points that I like to look at each and every week that help me formulate a good game plan for the upcoming week's worth of trading. All right, so we're going to get into the economic calendar for this week and see what we have in store. Definitely some interesting data points that I want to point out for everybody. Okay, so really not too much in the start of the week. As you can see here, a little bit of Fed speak tomorrow at 8 p.m. on the 6th, but really nothing. We have some initial jobless claims for the week on the 8th, but really what I am most focused on here, as well as the Fed, is non-farm payroll coming out at 8:30 on Friday the 9th. That's going to be very important, and this is also the first labor report where we have a full set of data points since the government shut down, and so this one I really do feel like this is going to be more meaningful than prior ones. So let's see what we get. All eyes are on Friday at 8:30. Okay, let's close this down and start to take a look at some of the charts. We're going to start off here with the monthly chart on the E-mini S&Ps, and certainly at first look, right, what we definitely have, you could say, a type of a bull flag here forming, but we have not created that newer displacement higher high. So right now it's really anybody's game, right? We're pretty much in an equilibrium overall, and until this structure right here is broken on the monthly, really have to be a little bit careful about navigating the market, because we could see that inconsistency right there running sideways in this balanced price range. But sure, you can certainly make the case that here we have the pull, and right here we're starting to set up with that flag right overall here on the monthly. The only thing really for the monthly that I would be concerned with, right, we have to make that new higher high, right? If we get over 69.94, which is that previous high, why wouldn't we hit that 7,000, see what type of resistance we get in that area? But if we do start to find some weekly acceptance over that big key area, then we'll definitely be looking for some higher prices. Otherwise, from that monthly perspective, right, I'm just going to take a look at the monthly lows there around 67.71. We might as well just call it 67.70 is what I'm going to be looking for, right? If we start seeing some weekly closes underneath that monthly low, then we might start to talk about a little bit of a different tune. But overall, right, we have really had clean price action. Obviously here the tariff tantrum, but as we spoke about in our other videos, right, we just retested, right, this prior breakout. So right now we are at technically the highest high in the trend count. Could we not afford, just on the monthly time frame, right, as long as we really just hold above this, there is really, even if we saw a breakdown all the way down, and that pretty much almost takes us, well, a little bit above is 6,000, yes, 61.69. So as long as we stay over that from the monthly perspective, sure. Okay, as I mentioned before, if we break the December monthly lows, yes, then we can talk about a little bit more of a pullback, but really structurally speaking, we are good even up into this area here. No issues for me. But would I want to be a new money buyer up here at the highest high in the trend count? No, not definitely not necessarily. The only thing really from the monthly perspective I can say, would be a safe bet is wait until we get out of this balanced price range, and then we'll know whether or not we are going to continue higher or we're going to continue sideways, or if those lows are broken and we start to come back down, right? If we break those December lows, at least from the monthly perspective, why wouldn't we come back down and maybe test these equal lows right here from basically the double bottom equal lows from November and October? And that's a far ways away, down all the way around 6,500 on the ES there. All right, so let's get into the weekly chart now and see what we can take away from that perspective. Really on the monthly candle, right? Just overall kind of a doji there. Really no decision, right? We couldn't find acceptance on a new higher high or a lower low. So failure on both sides of the market. Okay, so let's keep rolling around. Let's get into the weekly chart and see what we can take away from here. And we do have some levels already for the weekly, and I'll just throw them up. Might as well. Okay, let's get this on track. Beautiful. And expand it here. Okay, so from this perspective, really, what am I looking at overall, right? I really want to see the weekly highs from the beginning of beginning of December 8th. Those weekly highs, we kind of have equal highs right here, right? And you can see this, we failed, we couldn't get over. Right here, we didn't even get over the 69.15. Here we tried kind of a fake breakout, fell back inside. The week of the 15th, right, broke out, fell inside, and then now we've just been riding sideways, as we kind of mentioned, this equilibrium overall that has been taking place. But from the weekly perspective, really, as long as that 69.14 holds for me, all is well and good. If we start to see some acceptance on that daily time frame underneath that area, okay, certainly we have 6,900 even, and if that starts to break, well, I'd be looking down here, back down to the weekly lows from the week of the 29th, right, 68, 66, 65, right in that area, also lining up with the weekly highs from the 24th of November. So I'll be watching that, and if that happens to also break, okay, then we'll look for lower prices again, start talking about the weekly lows from back in the beginning of December, that same week of the 8th, and we can see obviously reactions here from November, mid-November, as well as the highs from October 6th. So, and that takes us down to around 68.10, 68.11, somewhere in that area as well. So that's what I'm watching here from that weekly perspective. Really, you know, underneath the 6,900, certainly a warning sign, and we may get trapped right in this area right here. But that's still a bullish to neutral. We could easily just come back up, come back down like this, and then go ahead and take off once again. So bullish neutral there, but definitely a little bit of a warning sign, right? Because we haven't made a new higher high. That trend count is trying to be neutralized, but under that 68, 65, okay, then I'm starting to sing a different song, and we'll look for that some lower prices, maybe about 50 points lower potentially here on the SPOOs. All right, let's move around here into the daily chart, see what we can take away from that view. Definitely can see over the last 3 weeks, though, this balanced price range really overall, and you know, we've had kind of this inconsistent choppy price action, and no Santa Claus rally really did not really come. Obviously, as I forgot to mention, we have a lot of geopolitical news coming out here over the last couple of days, so definitely also just be cautious from that day trading perspective, for potentially we get some type of a headline. God knows what's going to happen and how the market will react to it. So I also would put out a little flag of caution for everybody for any type of potential news catalyst that happens to randomly come in overall. But you can see here overall over the last couple of trading days, right, we sold off here, everyone's getting scared again, and then just recaptured, came back up, equal highs, and back down. So what we really want to see again here is just back down to that all about that 69.14, and let's bring out the daily chart. Okay, another view here with some supply and demand. And you can see the reaction here at the 6,900, right, from the last couple of sessions. And what do we need to see? Right, I want to see the bulls get over 69, 70, 1, 72. Get over that. Let's find some daily acceptance there. Hang out under over 69, 71. Try to match these highs up around, well, real close to that 7,000, right? Pretty much right there, the highs from the 31st. And then we can go ahead and see if we can hit those all-time highs again around that 70, 10, up and over that. Well, then we will look for really bigger, higher highs. But over the last couple of sessions, just kind of trapped here within these zones. So let's see what we get, either over or under. And the 68, 65 here, right, this low, definitely going to be paying attention to this area. And you can see right there, as well as right here, very important, multiple touches in this zone. So if we do lose that 68, 65, then definitely we'll be looking for those lower prices and potentially to come back down into close to that 6,800. All right, let's get into some day trading levels here on the SPOOs. What do we have in store? You'll have to forgive my mouse because I'm getting a little bit of latency here. But that's neither here nor there. Okay, here we go. Where are day trading levels here? I think I have them here. Boom. Okay. All right. So Globex is open right now. Market's basically flat. Do you have a pivot here? 69.55. We'll just call it 69.54 half, right? That's where we're going to have to get over. We can see already that we're finding some resistance in this area. You can see multiple. Sometimes here it has wick just a little bit above, but really no acceptance or confirmation on that 15-minute close. So we find some of that 15-minute acceptance, even better 30-minute acceptance up and over that 59.55, or excuse me, 69.55. Okay, then we'll look up for those higher prices. Back up 69.63 half. Okay, watching that zone. I have a pivot very close to there. It might as well just be there. 69.65. Just 2 points away. So that would be really the next target to match that equal high. And up and over that 69.65. Okay, then we can start to look about 69.75, 69.78. And then if we head up higher, back to that 69.90. Okay, then we can start talking about that 7,000 once again. But we'll see how the markets react there at that 69.90. All right, what do the sellers want to say? Well, we could also just get trapped, right, in this area as well. But for them to truly start to take over this downtrend, or excuse me, this potential uptrend, right, is what we would need to see what was happening here right at the Globex open. We want to see some of this acceptance back underneath 69.45. If we do see that, and we take out these overnight lows, well, yeah, for right now, then we'll be looking down 69.31. That's pretty much in line with the opening range from today's session, the open range lows, and if we are able to get underneath that. Now we do have a bit of congestion right here in the 69.25s. That also lines up, well, it's a little bit too low, but this area here got a lot of traffic here, right? So everything being even, 69.15, 69.17 is the pivot that I have. However, I really would not be surprised if we did try to see some bids in the 69.20s, this right in this area here. So that would not shock me either. And maybe, in matter of fact, you know, I don't normally do this, but I'm gonna throw up another little level there just to denote that for myself. So that we can call that a little demand zone there potentially. That's 69.25, 69.17 area for the next level below that the bears would like to break underneath. However, it's certainly an area where the bidders could come back up and push us back up into the 69.30. So potential longs there for sure as well. But if we do break that 69.17, well, then 69.10 and back down to 6,900. So there is our paths from the intraday perspective on the SPOOs. Okay, let's start to move right along here and get into the NASDAQ 100, the tech sector, and see what we can take away from that. Okay, starting off with the monthly chart here. Now, this one doesn't look, this still gives us a bit of a bull flag type of a look, in my opinion, on the monthly. Almost more like a mid-candle breakout here, but certainly you can make that case for the monthly right here, high and tight. So as long as this holds and we break over that downtrend, okay, then we'd be looking right to see if we could match that equal high up at the previous all-time highs, right? But the other thing that I am looking at is the same type of thing here with that balanced price range overall, right? We are not making a new higher high or a new lower low on that monthly chart. So we still could have, just like on the SPOOs, a bit of a choppy, unsure market until we actually see that break and hold, and then we can start talking about 27,000 for the bulls. But if we really start to break under those lows, okay, and we start to get below that 25K, then we would start to look for these manipulation lows here from back in November and October. But we're not there yet. As I said before, everything's going to really just depend on if we break those December lows, and that would really lead us back down. So same situation there, but just be careful, be mindful of that balanced price range overall. Now we'll move on to the weekly here. Right, you can still do the flag here like that. And the monthly is definitely very hot on our overbought, oversold. Seeing the momentum here, kind of wheel off a little bit, so that is nice to see. I would love for this to come down to the zero line and that really give us a nice push. But we are not overbought right now, so that is good, at least from the weekly perspective. But I think the weekly here does definitely more illustrate that sideways, inconsistent price action here, as they just do not know where to go. We kind of saw that reflected, of course, in the monthly quote unquote doji, for lack of a better term. It wasn't a perfect one, but you guys had got the idea on the look of the candle. Either way, again, we have our higher high and our lower low spot here. So we're really going to have a hard time seeing a bigger move in the market as long as we ride in this balanced price range. And VIX is, down at 15 right now, so also we should temper some of those expectations as far as how many points we're going to get, at least on an intraday basis, with the VIX being so suppressed as it is right now. And please give us back that 17 and 18 VIX. Now that's a much better market for the day traders. Okay, so let me pull up the weekly. We do have some weekly levels here. And we're right on the line, right? I'd really like to see this weekly. I mean, we did close above it, so as long as we're holding up above that 25, call it 575, I think we are still pretty much in a go mode to at least try to go ahead into the weekly highs from November 3rd. And but we do have all this right in the here, so pretty much a flat top right in that area. So 25 950, right? If we can get over these weekly highs, then I think it'd be very, very likely we'll come up and retest these highs. What happens from there, I don't know, but we could see sellers come in once again for a triple top. But we have to say overall that the trend, right, we're going up overall right here and really haven't not broken anything. Now, again, if we start getting underneath the weekly lows from the 29th and start to break this little uptrend, I know I didn't draw it perfectly, but you get the idea. We start to break under here. All right, now we've got a different scenario facing us, and if that's the case, I'd be looking for lower prices back down towards that 2500, 24,864. Anything under that, well, then I would be very cautious and be really targeting then the weekly lows from back in, when is this? It's not telling me. The end of November, right? That looks like Thanksgiving, which is down at 24,360. So underneath, if we find that weekly acceptance underneath 24,865, we'll be looking back down towards that 24,360. Anything under that, we could go ahead and down into this next area here at 24,245. All right, let's take a quick look at the daily chart. No, I don't like this one as much. I think this one is blank. Yeah. Another thing here that I wanted to point out, and I posted this on my Twitter feed. Now, we were looking at that bull flag for sure, but I do want to point out this. And another thing that I did also want to point out here, what I do like on the daily is that we're not overbought or oversold. We aren't over the zero line, but almost there, right? Negative 1.8. All right, so that easily can get back over. We've got plenty of room here on the daily to get back into that oversold territory. So I do like that. If we were hanging out here and we were overbought, I'd be a little bit more cautious, but I did want to point this out, right? Starting to look a little, I'm not getting the lines perfect to all the wicks, but you get the idea. Little potential diamond top here, right? But no confirmation until, right, we would have to break underneath pretty much the 25K If we started seeing candles form down here, all right, then we would know that this was true, right? Because the market could just as easily rip up above and take us right higher. So let's get into back to the chart with some levels here. One. Okay, here we are. Let's zoom in this way. Okay, overall, right, pretty balanced, right? No higher highs. And now, although we do have some compression, right, it just depends on the way you can look at it, because, like I said, you can make that bull case flag as well. But we've got our swing high here, right? Lower high. This one didn't even come up, right? This last high didn't even come up, because that the second higher high or lower higher low is at, what is this? 26.75, right? And these highs 25.935. Right, so it didn't even come back up to match it. It is lower, in fact, right? So now we have 3, but that just also leads to that potential compression overall, right? But we do have to definitely mention or take note of these lower highs overall. But here, for the compression, we still have this trend. So very easily, if you just want to draw up that trend line, and that could give you some clues here as well. But the level that I have, 25,300, basically, if we start seeing some daily acceptance under that, we can go ahead and look for these lows down around 24,875. If we get underneath that, I'll be looking for this next pivot, 24,570 area. Lots of reactions here. I think that's a big level and probably gives you a much better risk to reward. I mean, unless you wanted to be long and use the risk here, but I kind of missed that opportunity. So from the day trade, from the swing trading perspective, I'd really probably not be doing anything, right? Because we're just stuck, right? It's either going to be we break down and we look for these next pivot lows, or we can find acceptance over the 26.75. If we can get over there, all right, I will see you back up at the 26.540, and then potentially back to those all-time highs. But we need to see that daily acceptance over 26.75, and that will really open up the door. But until then, it is just sideways. All right, let's get into some day trading levels here and see what we can take away from that perspective on the intraday. And moving along, let's throw the 15. Don't you love it here when these daily levels? What was the low? Okay, here we are. Boom, boom, boom. All right, well, we're at that same spot, right? We saw the pivot as we were looking over ES. Same situation here, 25,650, right? We need to see the bulls back up and over that, finding some acceptance. You know, we've got yesterday's opening range highs, which was 25,670. And then my next pivot, really just 10 points above that. So if we can find that acceptance over 650, 670, and then 680 is the next area I am watching. Find that acceptance over that 680. All right, we can look for Monday's highs once again, right around 25,700, 25,708 there at the highs. We get over that, well, then I'll be looking to come up and trade up into this area right here, 730, 25,730, maybe just a little bit higher, 10 points or so, 25,740, and that'd be the next spot where we could potentially see some sellers once again. Either way, you could be, if I was trading right now, right, we could look to potentially be shorting up against this pivot and maybe looking for longs, right? I think that for tomorrow, it'd be certainly interesting if we come down into that 25, 615, 25, 600, and we come down. I wouldn't mind taking a long here and then seeing if we can get a move back up like this. But if we break under 25, 608, certainly under 25, 600, then I'm looking a bit lower, 25, 580. I think is the next area where it's very possible we would come back down to under 25, 580. Then looking just about 20 points lower, 25, 550, right, the next lows, and getting very close here to the opening range lows of the Monday session, which we're sitting at 25, 538, which I did think we were going to hit today, but we did not. But had a really nice situation here for a short trade, which I was looking for, but I was a bit too early for it, unfortunately, and I got stopped out. All right, so we have kind of a bullish plan here and a bearish plan overall. Some pivots for NQ already wrapped up. So let's get into some of the other data points that I like to look at each and every week here. Let's take a look at the sectors today, because certainly they were a lot of green in the market. Metals were just going crazy, silver and gold, and of course energy here up almost 3% as well, with the geopolitical news with Venezuela and XLF Tech, financials showing a really strong day as well. And we do have bank earnings starting, I believe, next week, in the middle of next week, JP Morgan. So definitely be paying attention to that as we start to kick off earnings season once again. But what's weak right now? Consumer utilities, consumer staples. All right, kind of these risk-off names. So I'm seeing risk on, risk on, risk on. Overall, I would assume XME is a little bit risk-off, but gold and silver have really been on a tear right now. Inflows here on the market today, pretty strong, right? Very strong. Nothing bearish there. We kind of topped out. We didn't get to that 1500 on the ADD, but still above 1,000, still above zero. So strong all day from that view. And you can see the market breadth, right? The Dow was a little bit weak, but overall, the market was strong and the internals there. Okay, so we're going to keep it moving right along. Let's go ahead and close out the show quickly. What do we got? What's the first thing that's going to come up? I'll just go down the list, I think, right? All right, let's look at the one-day VIX and the yield curve. Nope, still re-steepening, or pretty much has re-steepened there. All right, you guys know what I think about that. And this will certainly be important with the labor report. All right, we're coming into that complacency zone here on the one-day VIX. Not super in there, but not really extreme. But we did come down into that area, and we're just hanging out in this zone. So is this kind of showing me a little complacency potentially? I would have to say yes, and I would not be surprised to see this start to perk up once again. It's just very compressed right now with the volatility. I believe the VIX is down it's at 15, which, I feel like 15 VIX is, 2 years ago or 3 years ago, 12 or 13 was a low VIX. I feel like in these days, the 15 is the new 12, so, and the 14s are the new 12 on the VIX. But I would really not be surprised to see that start to pick up once again a little bit. Let's take a look here at how many stocks in the S&P 500 are trading over their 50-period moving average. Yep, 61%. Pretty good overall. And yeah, we never even got close to the 50 Everything's good there as far as breadth. And let's see about the 200 is 60%, still above 50. Yeah, overall that's just sideways flat, but at least here we have this low from December 9th, and we're kind of starting to create a new little uptrend there. So that doesn't look too bad, and that looks pretty healthy. And let's take a look at new highs versus new lows. Pretty good, well above the zero line. Came into the zero line. There's a little shakeout there. Boom, right off of it. Breadth is good. Let's look at the VIX by itself and the put-call ratio. See if we're off sides anywhere. Nope, equilibrium there. Not an issue. Okay, VIX. Right, we've talked about that 15 level and the 1575. So if we start seeing VIX, start daily closes over that 1575. All right, then we can see a little bit more volatility. Do have Momo kind of coming out of that a little slightly oversold and starting to pick up once again, heading towards that zero line. So let's see. Right now, overall, pretty compressed, really not doing anything. Over a 1575 will be the key there. Or as long as we stay underneath, watch it to come back down. And I just hate to trade this market down to 14, back down to 13, 1275. God forbid the 11s. And Q will give us 15, 20 points intraday, and ES will be moving 2 points. So let's not wish that upon anybody. Let's take a look at the junk bonds here by themselves in isolation, see if there are any notable divergences. Looks good to me. No warning signs there. Take a look at the VIX futures. No issues. Still in contango. Yeah, monthly 9-day coming down a little bit, but still in contango. And the VVIX volatility of the volatility under 100, under 105. No issues there. Show me over 93.5. Then we can start getting a little bit excited, but nothing really showing any volatility unless we get over 105, 100. So nothing there. Let's take a look at the bonds here. All right, we got the 1 to 3 share, 1 to 3 year, 5 to 7, 7 to 10, and then our long-term bonds right here. Oh, but potential ascending triangle here on the short-term bonds. But I wouldn't be surprised if this rejects this trend line here. We did break underneath. It is trying to get back over, but I wouldn't be surprised. Oh, well, it is a little bit over. Let's see if this actually holds. If this comes down, comes back up, and holds within that. Otherwise, watch out for a fake breakout there and to head back down. Right, which one is this now? I'm forgetting. 3 to 7 here. There we go. 3 to 7, flat, balanced price. Not really going to matter unless it gets under 119 or over 120, 30. Same thing for the mid-range. And TLT 20, 30-year bonds really not doing quite as well. Showing a little bit of bounce here in this 86.90. Right, we might as well just call it 87 right here. A little bit of a bounce, but the bonds, it would need to get back over 88.42. We could just get trapped here, and this would run sideways. But with the downtrend here, TNX probably starting to lift up a little bit, and it will be very interesting to see what TNX does with the labor report. Let's take a look here, because I think that 42 on a TNX is going to be, where is it? Oh, here we are. Is going to be key. We're right under it right now. 4.165, right? And here's the 42. Yeah, you could. It's not the cleanest, but it almost looks a little bit like an inverted head and shoulders. All for naught. Really doesn't make a difference unless it gets over 42. 42, we're going to say, is that neckline break. That happens. All right, we'll see that bonds dump even more, and the yields will come up. I'm sure Friday will be interesting. And, you know, even with the geopolitical news, markets today, a little bit choppy, kind of slow. Watch out for it really to be kind of that way. You might get one or two good intraday trades, you know, coming up, but I think the market is going to continue to show some hesitation until we get that labor report coming in. Overall here we are stuck in a range on the dollar, but it is continuing really to be weak. A lot of pressure. You can see the momentum here coming down. We tried to get over that 89.65 but could not. So fake breakout here, fake breakout here. Really looks like a repeat, so I really wouldn't be surprised we'll see the dollar come down 97, 92 in that area. We do have a little bit of traffic here, so I can certainly make a case that maybe 98 could be a spot where we could find some further support. And as a matter of fact, lines up very nicely with this low, so I do kind of want to mark this off for the dollar because that seems to be a little important zone right there between 98 and 97, 92. Let's see if that holds. Personally, I mean, it held before. I really would not be shocked to see the dollar come down to like 97, 95, with especially with gold and what is going on in the world right now. Let's take a look at gold. And this is a nice kind of cleaner view here of the dollar. You can see it's stuck, but overall, right, we had this move down, and now what? Right, potential redistribution. So unless the dollar can get over 131, it's probably going to be distribution, and why wouldn't it come back down towards these lows, if not even breaking it? So I'm not very bullish on the dollar. Some momentum though is coming up a little bit. That is a little good, but still below the 9 and the 20, 50, 200, all in the dollar. So, and of course gold just continuing to rip up. A little bit of pullback there, but we captured these prior highs from back in the end of October. So as long as the gold futures really stay over 44.20, 4,400, so about a 20-point range there. As long as it stays over 4,400, we'll call it really no issues for the gold bulls. Watch for it to go ahead and come back up into the 45, 60s. Would not surprise me at all. How are we feeling about 5,000 gold this year? Let's see what happens, but might not be out of the question. This little dip here, though, definitely was needed. We were getting a little hot on our overbought, oversold indicator. Now coming down to that zero line, leveling off and starting to. It hasn't turned green yet, but it looks like it's starting to curve up. So looks bullish and good. Do we have anything else to go over? Yes. Why don't we take a look just at the oil volatility with all this stuff with Venezuela right now? This will be a little interesting. Actually, still quite suppressed. And skew still can't get over that 154. So no out of the date options getting out of whack right now. And yeah, you know, honestly, I thought we would have seen a little bit more on the oil volatility. It's a lot less impressive than I thought it would be. Let's break it down to the daily. Nothing. It's very interesting. Okay, I think that's everything that I wanted to go over. I'm going to add it on here. Oh. Let's look at the credit spreads and the bond ratios really quickly. Okay. Looking a little bit weaker. Still, I want to see this one right here. I want to see this break below the 50. A little bit. It looks like it's going to, but a little bit of risk on or risk off here, still above the 50. This, our second one, SHY to HYG. This one is below. So this one's giving me risk on. This one's saying potential still risk off, but not they're not diverging, or excuse me, they are diverging. I'd be a little bit more. This one's faster moving, so I'd be a little bit more on the risk on viewpoint here than this one. I really wouldn't be shocked to see this break lower. And the bond ratios all above the 50 here, as long as they all stay, I would say bearish on bonds and look for TNX to go up there. But overall, pretty much flat, right? Not really saying much. And corporate bonds, let's see if it gets over this little downtrend. Nothing really going on there. I'd like to see that corporate bond compared to SPY, because I do think there's a little bit of a divergence. So, slight red flag there. One last thing, take a look at RSP. Oh, I saw a buy there. Let's see if that gets over that 650. Looks like it's trying. All right, let's look at RSP really quickly. It's another little breath exercise. And all right, well, they are in lockstep. So no issues there. Let's just see if it stays over 192. Not really an issue. All right, so another green flag for breath overall in the market. So not really too many warning signs other than potential geopolitical, but we saw how the market opened up from Globex after the Venezuela news, and markets seem to not really have a problem with it. And so it doesn't matter really what we think. All that matters is how the market is reacting, and then we gauge from there. But hold over these equal highs here at the 192 half. We start seeing some daily closes under there. We'll look a little bit deeper into potential weakening in breath. The one thing I will say though, do have a little bit of divergence. Have the pop here up, trying to match the prior all-time high. But what's going on here? A little bit of a divergence. So I do think that is interesting. It could just as easily, we're pretty much at the zero line there, so it could just as easily curl right back up and be fine. But I will note that divergence as well. All right, guys. Well, excuse me. That's everything I really wanted to go over for this week's video. Let's see what non-farm payroll brings us on Friday. Watch out for choppy conditions until then, and also just be aware of any news releases. As I said, intraday can move the market very quickly. God knows, if we're gonna, invade another country, and what the market's reaction will be to that. So just be aware of those macro political events. I thank you again so much for joining me. I hope you have a great trading week, and we'll see you next week. Take care.